Should you trade in December? Let's answer that question in today's video. In today's video, I'm going to briefly explain what happens towards the end of the year, particularly in December around the holidays, and why or why not it would be a good idea to trade. If you're a trader, make sure you watch this entire video because I promise you it's going to serve you for the rest of your trading career. So what's actually happening in December and towards the end of the year in the financial market? So first things first is there is definitely a reduced market participation, right? A market is simply a system made up of buyers and sellers that are buying and selling certain things. In this case, we're talking about financial assets. And with that being said, like everybody, big banks, hedge funds, institutions, a lot of them are taking off towards the end of the year to just go spend time with family and to take vacations and to do normal holiday related stuff. And so really what we see is a lot of the times from like the second week of December, business starts slowing down, especially in America and around the world, but really second week of December up until like the second week. It seems like the second week of January, maybe January 10th, things start really getting back into the normal hustle and bustle. So because there are less market participants that are buying and selling, this could be stocks, it could be currencies, it could be commodities. Because of this, there is lower liquidity. There's lower volume being traded in the market, which kind of leads to the second thing in regards to trading in December, which is higher spreads. Because there is less liquidity in the market, there is generally higher spreads, which, as traders, there's certain things that we can control, certain things that we can't control. And one of the things that we can control is not trading when spreads are super high. This is something that is like a negative edge. This is, a way that the market maker, the broker is making money. And so when spreads are higher, it's not as advantageous of a time to trade, obviously. And historically, because of the lower liquidity in financial markets around the end of the year and the holidays, this does cause spreads to be higher, which is a negative that's acting against you higher in a larger sense than it does a lot of the other times throughout the year. The third thing that I want to talk about is because there's less market participants, because there's less activity actually happening, less liquidity, less volume, this causes less impulsive moves to happen and less trends to happen or more erratic behavior. So if you have a trading system or an edge that you're trading currently that works great throughout the year, now there's a lot less market participants trading. And so you may see moves that you don't really see anytime throughout the year, which we're going to talk about later on. Now, one of the other things that happens to be aware of is something called tax loss harvesting. And if you're not familiar with what tax loss harvesting is, it's definitely an atypical behavior, which we don't see happening a lot of the times throughout the financial markets. But basically what it is traders, fund managers, institutions can be selling off their losing positions. And essentially what they're doing is they're selling their losing positions at the end of the year. So that way their taxable income gets lowered and then they'll rebuy those positions later on. And this is known as tax loss harvesting. So this does happen a lot, because these guys and traders are wanting to realize this loss, which is, basically a tax write-off in the trading business. So again, we kind of see this happening even starting kind of the first week of December. We see people start preparing to do tax loss harvesting, which again, this is not something that's common throughout the remainder of the year. And this may be something that you may want to consider doing is if you have, I know I've done this with crypto for sure. You can do this with stocks. But you may want to consider tax loss harvesting so that way your taxable income on the gains that you've made gets reduced. So just something to consider if you do have losing positions. Another thing to think about is something called the Santa Claus effect, which is a quite widely studied phenomenon that happens kind of during the last week of the year. And basically 75% of the times during the last week of the year, right around Christmas, the stock market tends to see quite a rally. And this happens for a couple reasons. Number one is there's a lot less volume in the market, right? So the market's going to move quicker with less participation. And then the second thing is, for whatever reason, there's increased optimism around the end of the year. Maybe it's people, that are setting their New Year's goals and they're feeling more optimistic about what's to come for the next year. It's just the whole thing that comes with a new year, right? It's a fresh start. Things are going to be better this year than last year. So this is something called the Santa Claus effect. And then the last thing that I want to talk about that you have to be aware of is called year-end window dressing. And essentially What this is large fund managers will essentially be adjusting their portfolio to increase their perceived performance. And essentially what they'll be doing is selling some of their underperforming assets and buying good positions. So that way, when they roll into the next year, their fund has this appearance of better performance than may actually be. So this is, again, all of this stuff, the Santa Claus effect, the year-end window dressing, tax loss harvesting, all of this stuff is irregular behavior. So your edge that you have, and you see this with a lot of trading systems, and you could test your system throughout, previous Decembers. A lot of the times you see that it will not perform as well as it does the rest of the year. So what is my conclusion on all of this? My conclusion on all of this is that I don't want to be trading the second half of December or at least the first week of January, just because of this irregular behavior and low liquidity, higher spreads, less market participants. Ultimately, it's up to you. You can do whatever you want to do, but most traders take off this time period for these reasons. Hey, and by the way, if you'd like to know how you could become a top 1% trader, then make sure that you check out this video where I've analyzed 10 things that the top 1% of traders do differently. Go ahead and check that out right now.